Welcome. In this video, Xcn coin trend broken. Is bullish coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. There had been a notable descending trend structure on the chart that had been in effect for quite some time. This trend represented a period during which selling pressure dominated, limiting upward price movements and weighing on investors. However, this picture has now begun to change in a positive direction. The clearly defined downtrend has been broken to the upside with strength. In technical analysis, such a breakout is considered the beginning of a significant shift. Prices are now moving above levels they previously failed to surpass, potentially opening the door to a new wave of buying. This trend line had been tested multiple times in the past, causing the price to pull back each time. But this time, things unfolded differently. The price clearly broke above the descending trend. This signals a notable shift in market psychology. It suggests that the market may be transitioning from a seller-dominated phase to a more bullish period where buyers take control. This sets a highly favorable foundation for prices to reach higher levels. One of the most striking developments is that, following the breakout, the price returned to test the broken descending trend line. In technical analysis, this is referred to as a retest, a classic and reassuring behavior. Such retests confirm the breakout is healthy and strong. The price has now used the previously resistant trend line as support. This means the downtrend is no longer an obstacle, but has instead turned into a support area that may help push the price higher. This transformation is one of the key technical setups often needed to kick off a new upward move. The fact that the price found support at the retested trend line also shows that investors have technically validated this area. Many market participants may now view this level as a reliable base and could be forming long positions there. This psychological support can help the price move upward more strongly and steadily. Therefore, any potential uptrend following this retest may be sharper and more sustainable. Moreover, since the broken descending trend line had been suppressing the market for a long time, its breakout to the upside is not only a short-term positive signal, but also a highly significant indicator for medium and long-term price movements. This breakout is not merely a technical detail. It could represent a major turning point in market structure, investor psychology, and overall trend direction. In technical analysis, breakouts followed by retests and subsequent buying waves are often seen as final preparations before takeoff. The fact that the price has completed these stages indicates that the uptrend has been technically confirmed. These kinds of technical formations following trend reversals instill confidence in investors and help the price progress more smoothly toward its potential targets. Now that the price has moved above the descending trend and is treating this area as support, it may also attract new investors into the market. Many technical analysis followers wait for such breakouts to take positions. This can lead to an inflow of fresh capital, further accelerating the upward momentum. The combination of these technical and psychological developments points to a much more solid and healthy uptrend. But we can't base our analysis on trend lines alone. Let's take a look at other metrics as well. Stay tuned. The Elliott wave theory is one of the most powerful and comprehensive technical analysis methods used to understand price movements in the markets. According to this theory, the market naturally moves in specific wave patterns, and the structure of these waves provides valuable clues to investors about future movements, especially in short-term timeframes. Analyzing the position and structure of Elliott waves allows us to see more clearly where the price wants to go. In this context, the current short-term Elliott wave formation on the chart presents a highly notable and promising picture. When examining the current short-term structure, it appears that the price has successfully completed the first wave and then the second corrective wave, and is now transitioning into the third wave. In Elliott theory, the third wave is typically known as the strongest and longest wave. This is because at this stage, positive signals from technical indicators and investor psychology align. The market begins to accept that a new uptrend has started, and buying pressure increases. As a result, the third wave is often characterized by strong volume and sharp upward moves. The fact that the price is currently at the beginning of the third wave is a highly positive development from a technical standpoint. This suggests that we are at the early stages of a move that has the potential to reach much higher levels. Fibonacci extension levels are commonly used to determine the targets of the third wave. Specifically, the 1,618 and 2,272 levels are frequently used in technical analysis as potential target zones for the third wave. These levels are considered mathematical reflections of prior price movements and offer a roadmap to investors. As the third wave begins to move upward in the current structure, the probability of the price advancing toward these targets appears quite high. If the market maintains this positive sentiment and investor interest continues to grow, the price could first test the 1,618 level and then accelerate toward the 2,272 level. This move could also bring new buyers into the market. Third waves are periods when the price clearly defines its direction. Confidence in the market increases, and many investors begin to take positions. Additionally, in technical analysis, third waves are generally expected to be supported by rising volume. If trading volume increases during this process, it will further highlight the strong upward potential of the third wave. Volume-backed rallies are always healthier and more sustainable. Therefore, the third wave currently forming suggests that the price is not only in a technically strong phase, but also in a psychological and structural breakout stage. It should be remembered that third waves in Elliott theory are difficult to invalidate. As long as the price does not fall below the low of the second wave, the structure of the third wave remains valid. While the price may experience some corrections during this phase, the overall direction remains upward. This gives investors confidence in forming strategies. Especially for those looking to take positions, the beginning of a third wave can offer major opportunities. Since most of the move has yet to unfold, significant gains can be realized if the price advances toward its potential targets. At this point, another important detail to pay attention to is that minor corrections within the third wave do not disrupt the long-term uptrend. In other words, the price may occasionally pull back slightly during this process, but these corrections are natural and healthy movements within the third wave. What truly matters is that the main trend remains upward and the price gradually moves to higher levels. From this perspective, the current structure appears very healthy and has technically strong upward potential. Among technical analysis tools, one of the standout indicators for understanding the strength and direction of a trend is undoubtedly the vortex indicator. This indicator helps us understand the dynamics behind price movements in the market, and especially assist in identifying trend changes at an early stage. It provides effective signals in the process of determining direction in an asset, and in the current case, it presents a very positive and promising picture. The notable developments on the chart are likely to excite investors. One of the indicator's lines has recently moved upward and crossed above the other line. This development clearly shows that buying pressure in the market is increasing, while selling pressure is beginning to weaken. In particular, the widening distance between these two lines indicates that the trend is gaining upward momentum, and that this momentum is strengthening. Similar structures in the past have led to comparable price scenarios and have often triggered significant upward moves. This should not be seen as just a temporary reaction or a weak correction. On the contrary, this structure shows that buyers are increasingly gaining control of the market and that prices could be gaining sustained upward momentum. If the distance between these lines continues to increase in the near term, it would be a very strong signal that the upward trend is likely to continue strengthening. From a technical analysis perspective, this presents a very positive outlook. The vortex indicator helps us visualize trends. Yes, friends. I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.